Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, January 10th, 2018. Take a quick look at what I'm watching right now, some near-term and potential longer-term trading opportunities. Broad markets put up analysis lately. As you guys know, there's been a void of analysis on the broad markets because there just hasn't been anything worthwhile noting. One thing I do on this site, if you request something, if I haven't posted analysis on the broad markets or a particular security commodity index, certainly go ahead and request it. But if I don't see anything worthwhile to report, I don't waste my time or yours posting analysis. So for the last few weeks, or really since the first of the year, we just had this straight grind up, and there was nothing much in the technicals until recently I started pointing out. Now, keep in mind, I'm honed in down on the 15-minute time frames. I had a few questions lately on this call for a little pullback in the broad markets. This isn't a collapse. This isn't a major 10% plus correction. Anything can happen. So I have what I labeled as my current final your maximum targets as well as my near-term targets. So what I was looking for in the last few days is a 1 to 2% pullback. That put us about here to this 160.12 level. We're you can see now we're three-quarters of the way there already with this gap down. And I figured it would come on a gap down. It didn't happen yesterday, but we got it today. And these are the levels. I put this up on the front page. You can see 168, 161.58. We hit it to the penny at the gap, opening gap. We bounce, and then boom, we've now taken it down. So, the squiggles that I've drawn, go something like this. And again, this is, excuse me, it may not seem like much, but if you're an active trader, especially day trading, when you day trade, you can take an above average position size because there's no overnight risk. So, you trade the NQ, E-mini futures or any leverage products. And 2% pullback, you can make, a lot of money on that. Again, with minimal risk because you can get out at the end of the day if you want to play these squiggles, intraday trades. So either way, now that we've taken out the 168.58, looking for a move down here to 160.82. Another reaction, move down here to 160.12. It's pretty decent support. And again, 15-minute chart. You're not going to see much on the daily chart. And then so that would be again my minimum pullback target, and then this is the what I call if things get ugly target, or not if things get ugly. That's not much of a drop really. To put it in perspective, since we're only looking at a 15-minute chart off the recent highs, that's a pullback now of about 2.5%, because we went just a little bit higher than where I was originally calling for 1 to 2%. Actually, it was a 1 to 2% plus drop. It was a little bit more than 2% when I first put it up. So that's QQQ. Trade it as you like, but nice big red candle so far on this 15-minute chart through that support level. So I do think we're going lower. Here's SPY, the S&P 500 tracking ETF. Very, nice, clean rising wedge pattern. Posted this one last night under a comment section, this chart, and here in mentioning that SPY had just broken down yesterday. So you can see the breakdown below there. I had a minor trend line here in the primary uptrend line breakdown. There was your first support level. We gap below it, which is bearish, and it's a great way to kick off a pullback during a momentum trend. What I mean by that, you guys often hear me use the term. I use this with the pot stocks as well. When you see a momentum rally where you have a lot of momentum traders just buying because it's going up, momentum traders are like cockroaches. When the lights come on, they scatter quickly. Those are the active traders. They get out once the momentum breaks. And I use the analogy, it's like a game of musical chairs. When the music stops, you don't want to be the last one standing. So gaps are pretty nice because they capture a lot of people in there. And so if you are going to, if my correction scenario does play out, you have the people that didn't get out. They didn't see these technicals. They didn't see this coming, and they were waiting to see the momentum reverse. So when you gap down, even though it's not, relatively speaking, at least by historical standards, not a big move down, but I just showed you about a zero point 0.7 drop in the QQQ, and that's really the index I'm focused on. That's where the momentum traders are after tech and all that. What happens is they say, oh, well, oof, that's a little more than that blew past my stop. I wanted to get out, on a 0.5% pullback or whatever it was. Well, they're trapped now. So what they do is if you get any bounces back to support, they want out. And so those are objective levels, but you may not get it because during a momentum rally, again, like the pot stocks recently, like this one, just off the first of the year. And again, I'm talking in this smaller sphere of 15-minute chart, intraday charts. That's what you get. So a gap is a great way to kick it off, and it further reinforces my view now that this scenario will play out for at very least a move down here to 270, 208. So if you're a dip buyer and you're looking to get in, this is also what I posted in the comments section last night. I post these for two reasons. It's not an official trade now because I just don't see enough downside at this point. The momentum's too strong to put it on as an official short trade, but I think there's certainly an opportunity for active traders to uh, game a bounce, on the short side, as well as long traders looking to buy the dip. These are my levels. If you're uber bullish and you think any dips will be bought up very quickly, step in at the first one. Otherwise, I would have no interest personally stepping in till we get down here long. And in fact, as of now, I'm short. So again, just looking for a quick pullback. May last a few days. We'll see. And again, the charts are dynamic, and so is my analysis. We'll take it from there. So that's the charts. Again, on the 15-minute world, I could go back out like I've done to the daily. Those divergences do exist. They go all the way out. But those longer term divergences haven't played out for a while. They just continue to build. So let's just focus on this. And if anything else starts to develop, we get some clear developments on the 60-minute charts and the daily charts, then I will sort of expand or broaden my focus out to those longer term time frames. I'll kind of just jump around now and wrap this up. Just again, trading opportunities. So this video will be a little bit all over the place, but I did want to touch on the broad markets first, and a lot of people follow that. Tandem TNDM. I've covered this one in the past. They make diabetes insulin pumps, and they reported last night, and they had a decent earnings report, and as well as forward guidance. The stock rallied in after-hour session. So you can see here, I have a line here, actually two lines. This first one's around 313, this white line. You can see it capped a lot of the advances other than these two. We had one reaction there, recently a false breakout right in anticipation of earnings. So maybe people got there was a leak of what was coming out, so you can see that false breakout, but then it got checked. In other words, it was after the market close, we fell back below this line here. So I think that's a significant level, and that's probably the breakout level, 313. We took it out. And then I mentioned last night in the trading room 343 because that capped the previous reaction high from yesterday, as well as the top of this gap, the bottom of this gap right here. Gaps are tops and bottom are natural support and resistance levels. So this is a pretty powerful breakout. So what essentially I'm looking at now is you have this big basing pattern here in tandem. You have divergence. You had divergence down here at this point, but most importantly, you have this multi-month basing pattern. The stock breaking out now, up 21%. You might be in the mindset, why chase a stock? I can't buy a stock that's up 21%. That's gone too far. Well, this stock has so much more room to run. If this bullish case does play out, there are no guarantees, and this is a low price stock. Keep that in mind. But this stock has fallen 98%. Even if it comes up to and just makes a gap backfill, let me try to zoom in for you here, show you where we're at. If you can buy it down around close to that 343 level, and I did mention this again in the trading room last night, that's the level to watch. So if you can buy it around there or even above there, a gap backfill alone would be a 30% gain. And if this one gets some traction, the upside there is about 160% to this target here and more. My thoughts on this, knowing, the industry a little bit. I was talking to a representative that works for one of the pump companies, and this this company is most likely a buyout candidate. That's been my view on it for a while. The insulin pump company, it's a tough market. Primarily pump markets dominated by one company, Medtronic, and then there's a couple very small distant second players. Tandem's one of them. So my guess is maybe a buyout candidate, but highly speculative. If you go with a stock that's down 98% in the last year and a half or so, trading at 346, don't put much more money in there than you're willing to lose because anything can happen. But I wouldn't be surprised over the next year or so to wake up one day and see this stock up, 30, 50% or more on news that it's being acquired by another company. Next up, oil. I think the next swing trading op will be in oil on the short side. As you guys know, throughout most of the year, at various points, I've been bullish and long. We've had official trade ideas quite a bit in the energy sector. It's been a lot of my focus. But at this point in time, I think we're setting up for a significant pullback in crude. And here, I'll walk you through it real quick. This is the chart. I can't fit it on. I brought this over from another monitor. I've already shrunk it down a little bit. If I shrink it down too much, Sorry, if I shrink it down too much, we sort of lose a lot of well, I guess we can do this way. All right, so this chart goes back, goodness, 20 years, so 2 decades. This is a weekly chart. And well, let me just focus on some of the key points here, and then we'll look at the near-term action. See these red circles up here? Just like I have these arrows down here, and I've shared this chart many times over the years. This is when you want to be buying crude, not simply because it's oversold, but if you can confirm that with other technicals, that's when you want to go long. And you can see here in this one, we had extreme oversold readings. This was during the meltdown in crude oil. Um, and we had strong bullish divergence. That's where I got very bullish on crude. And so I think the bottom is in. I think it's safe to say that. I'm not calling for continuation of this great bear market, but maybe a decent correction. So either way, again, just look at the circles. The blue arrows show you the tremendous rallies. Even as a standalone, buy and sell strategy, this would have worked. Again, I like to align with other technicals. And you can even see, although this was a consecutive three different oversold readings. Each one produced a very profitable swing trading op if you're trading crude futures or even the energy stocks in most cases. All right, so now fast forward. Let's look at the sell signals here. Same thing. I mean, it's amazing how effective the RSI can be used as a tool looking for prices with overbought or oversold readings. So the red arrows show you or the red circles show the oversold readings. And again, I'm using a log scaling. These are significant drops in oil prices. And the thing about oversold, and this is one reason I love shorting, is stocks tend to fall, or any security, in this case oil commodity, tend to fall a lot faster than they rise. So again, very simple but effective trading strategy. You look for these overbought readings. If you have two in close proximity, that's divergence. That's even better. That usually leads to even deeper trend reversals. And there it is. So I just went through the 1, 2, 3, 4, 5 previous overbought readings, again on the weekly time frame, going all the way back to early 2003. Without fail, you would have done very good shorting crude, or at least getting out of your longs. There we are. We're overbought for the first time in nearly 2 decades, and we have negative divergence on the PPO. We don't have it on the RSI because that made a higher high. However, you don't always have to have it on both indicators. In fact, you only had it on one indicator here in the RSI. You did not have divergence on the PPO there, and that marked that big top. And just how much do we pull back? Well, that depends on the charts. We'll have to zoom down to the daily charts and all that. But what I see here also is this sort of rising wedge type pattern. I'm not putting too much stock into these trend lines now. That's why I have them dashed. Because we don't have a lot of reaction, especially on that lower trend line. The upper trend line does mark the divergence. That's significant there. Either way, the risk reward, and by the way, this level here, this horizontal resistance line marks some key reaction highs from back here in 2015. And you can see this sort of been an area of with quite a few reactions in the past on crude oil. So either way, an extended run to get up there, and that's that. So we'll take a look at the near-term charts, and then we'll wrap this up. Okay, so that was a weekly chart, weekly candlesticks, 2 decades of price action in crude. This is a zoom down now into the world of the intraday charts. One of my favorite time frames, the 60-minute chart. This is a 2-month 60-minute chart showing you right now we have on crude futures, that is CL. So we have divergence here. You can see negative divergence at this most recent high. We have what I call a minor trend line, and then the primary uptrend line here. And I see in the very near future, and I'm looking for signs of a reversal, some type of bearish candlestick reversal pattern, or just prices rolling over, coming back in. And I think we come down here to at least that 6150 area, and we'll have some reactions along the way at these trend lines, most likely in these support levels. But I can see a pretty decent pullback in crude, and I think it's going to happen soon. The momentum has been very strong again, so it's hard to step in early on this one. XOP, one of my favorites. There's a few different energy ETFs, XLE, XOP, XES. And they all have different subsectors of the energy sector. But this one I think stands out right now. You can see a nice rising wedge pattern. Prices are working its way up within that wedge pattern. This is a 60-minute chart, and I may add this as an official trade idea. In fact, I plan to. And this is the same uh, sector, the exploration and production subsector of the energy sector, that you can use drip, which is a 3 times short exploration and production, or gush, which is a 3 time long. So maybe another thrust. Either way, we're working its way up this trend line, but watch for a break of this trend line, especially a 60-minute candle close. These are all support levels, but at bare minimum, once that level cracks, whether we get a kickback, back tested or not, once we break this trend line, I think it's safe to say we're coming down here to that 36.87-ish level, roughly $37. That would be my minimum target. And again, based on the outlook for crude on the longer term time frames, I think we could be looking at a deeper correction here. In fact, we look at the daily chart of XOP, you can see negative divergence here, negative divergence on the RSI. As you guys know, I love to set up, especially on when the 60-minute and daily time frames align, these divergent highs and lows. You can swing trade them all day long. This was a divergent high back here in XOP, right here at this point, and that led to a drop of 35%. So, juice that up times 3 if you're trading those leveraged ETFs, although they're not great buy and hold investments unless you get a unidirectional trend. They do work well when you have a fairly unidirectional trend. Where you end up getting that decay I talk about is during these sideways grinds. That's where it doesn't work. The faster the rip up or down, the better, and you can actually do better than 3 times the underlying when you get these sharp moves up that are mostly unidirectional. In other words, very little give backs and sideways grinds. So there it is. Negative divergence. We had a divergent low right here. This was a long trade from that point. We hit these targets, first and second official target. The unofficial third target was also hit, pulled back. And that's it. Not much more to say. We have resistance right here. So I think the upside in the energy stocks in the near term is limited, and I think they will present one of the best, one of the better, I should say, swing short trading ops coming up. Hard to say when, but like I said, we'll use those 60-minute charts to try to time the entry on a short trade there, or an exit if you're long and you've been trailing up stops. Gold I've covered extensively, especially on that post last night. So there's nothing to add to that. Check out that post that I put up on gold and the mining stocks last night. On that, I'll just add real quickly. If we do get a little bit more, if we go down to those max near-term pullback targets that I just mentioned in the broad markets, that will most likely put somewhat of a flight to safety bid under gold. And we're seeing that today. Gold is up, GDX is up. So again, looking maybe some near-term upside if the markets pull back, but longer term, I still think the risk reward in gold and GDX is not that good. As I told you, it's a coin toss whether we make a new high in gold in the precious metals or not. So either way, I'm just rather stand aside that one for now. And I'd still like the utilities trade. Looks like we may have, if this is my stop here, yeah, 50.86, we may have just slightly pierced the stop. I can tell you I'm going to give this one room personally. If it stopped out, which I think it is now on the official trade, I will remove it, and maybe even add it back on. I still very much like this, and I was looking at the charts recently and saying I could see that one last thrust down. Just sort of saying that in my head, eyeballing the charts and where some of the individual stocks were. Either way, yeah, that's a failed breakout so far, but this is still very solid divergence. We still have the bullish divergence on the 60-minute that's only extending with this new low. And the daily chart, this is a very solid support zone. PPO is curling up. We're at extreme oversold levels. We haven't seen the utility stocks this oversold in a while. And then to tie all that in together, if the broad market starts to exhibit weakness here, this is the king of defensive sectors. I mean, you have defensive issues, you have defensive stocks that and other securities like treasuries, gold, and utilities. These are things that usually see inflows during times of market weakness, especially if it looks like the economic cycle may roll over or be a little pullback. Despite that, again, just on the technicals alone, even if the utilities have more downside over time, we're looking at the very good odds for a near-term bounce here up to that 52.21 level in the near term. I think the downside is minimal, and the fact that it's undercut this support zone by a hair today but moved back up, that's actually bullish. That usually washes out some of the last of the longs, gets maybe a little more short interest in there and sets the stage for a short covering rally. So still one of my again, not an explosive gain potential in utility stocks, but if you're looking for something to diversify with, I think that's an area right now that makes sense. Okay, let's wrap it up there. I'll try to get this one out as soon as possible. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.